Hey everyone, today I'm going to discuss the topic of inflation, which is gaining a lot of momentum within the financial community. Hopefully after this video you will have a better understanding of what inflation is and why it is important to understand. As we all know, the COVID pandemic has impacted the economy in a variety of ways. When the pandemic first began and the world was shut down, many people lost their jobs, companies went out of business, and many people got sick with COVID. During these uncertain times, the government had to assess the situation and decided to take certain steps to boost the economy during this recessionary period. In order to address the situation, the Federal Reserve sent Americans stimulus checks, and the Federal Reserve also increased the supply of money within the economy. To be more specific, over the last year, 25% of all American dollars that are available within the financial system were printed within the last year to stimulate the economy. With this increase in monetary supply arises the risk of what is known as inflation. Inflation occurs when the price of items begin increasing because the value of a specific currency starts to decrease. In the case of the Federal Reserve's monetary policy to print more money, the value of the dollar begins to decrease because the same items that you would purchase in the coming days, weeks, or months begin to increase in price. Let's imagine you wanted to purchase a car from a dealership. The price of the car may have been $10,000 before COVID began. However, now that the economy is within its current state, the same car may cost more because more individuals have disposable income and certain items have increased price tags. However, that same $10,000 that you left in your bank account did not increase in value. Because of the inflationary period, that same car may now cost you $11,000, which is a hefty increase purely driven off of economic conditions. This is just a simple case of how inflation can impact consumer spending and the economy at large. Holding cash during inflationary periods can sometimes decrease an individual's purchasing power over time. In order to offset this risk, some folks may buy other assets like real estate and commodities to offset the inflationary period to preserve their capital. However, it all depends on that individual's investment goals and financial situation. Overall, inflation is an interesting topic that is a huge point of debate for financial leaders, politicians, and investors. So with that being said, I hope this breakdown of the concept of inflation served you well, and be sure to stay tuned for more content at www.simpme.com. Thanks.